Today I'm going to show you guys how to trade trend lines but better than Tori trades, because this is going to make you more returns every single month and it's going to have much higher frequency since she trades on a higher time frame. I trade on lower time frame. I'm going to show you exactly how to apply trend line breaks on a lower time frame to catch more returns every month. Let's get straight into it. So you guys already know like my stop runner setup. I think a lot of you guys on YouTube have seen me talk about it in my trade recaps, but essentially it's going to be similar to that, except we're using trendline breaks. Now, there's two ways to use trend lines. One way is a trendline break to trade a reversal. So let's go over this. Let's say we're in an uptrend and I trade a reversal. This is my main setup. This is equivalent to my main setup. All right, I don't trade trendline breaks anymore, but this is what I used to trade, and it did indeed work. But it's not as good as what I trade or teach you guys now. This is like an example of how you would trade a reversal using trendline breaks. Again, mark out a structure here, and then boom. Something similar to this. You basically enter as soon as this line breaks here, because how you draw this line here is essentially based on candle to candle structure, which I'm going to show you guys a quick example in a second. But as soon as it breaks here, you have your stop order. So you have a sell stop in this case, meaning as soon as this price point breaks, you're in the trade. You're short here, stop loss at the nearest high that's got made, and you target whatever you want on the left here. You can use targets that teach you guys within the course or within the free boot camp using key levels. That's how you trade trendline breaks with a reversal. Now, if you want to trade a continuation using trendline breaks, this is how you trade it. Let's say you don't want to trade a reversal because the higher time frame is bullish. So let's say we're going to supply here. Let's say it's like a 1 hour supply, and you're anticipating this 1 hour supply zone when it comes back to not hold because we're bullish. If we're at all-time highs, highs are weak. Remember that, guys, highs are weak. So when we come back here, instead of trading a trend line break, so instead of trading this right here, you are just doing the exact opposite. So instead of shorting at that trend line break, you're actually longing at that trend line break. It sounds so stupidly easy, but this literally works if you apply it in the correct context with the correct direction in the market. So instead of, again, reversal, you're literally doing it a buy market. You can just have like a limit order actually here, buy limit order here in this case. As you can see, your entry point is the exact same in both scenarios. However, one of them is you're actually trading reversal because you're anticipating this as high time frame supply. Maybe you were actually bearish on the higher time frame. You're actually looking for shorts. In this case, we're bullish. You expect this to not hold, so instead of trading this reversal here, selling, you're just buying here. It's literally that's literally all you're doing. And your stop loss, you just cover another low nearby or PY. If you don't know what that is, check out my other YouTube videos. That's one example. And now another way of trading trendline break when it comes to anticipating something to fail, because this is the main way to trade a reversal trendline break. A way to anticipate a failure is just drawing the trend line here. Right here, and then once this breaks here above, you're entering here with a buy stop loss again, same situation here, and you target a high. I'm gonna show you guys some examples of this so you guys understand this better, but this first example here is very straightforward. If you want, you can take a picture of this just in case, but delete that. Let's go over the first example of what I mean. So what I mean, for example, let's say you are bullish, right, which I was on this day. And what you do is you're trading a reversal, right? So you draw your trend line here. And usually for trend lines, you want at least 2 touches, preferably 3. But that's not always the case. Usually I try to find at least 2 because you can't draw a trend line without at least 2 touches. It just doesn't make sense, right? It could be anywhere. It could be any angle. You need at minimum 2 touches. So we'll draw at these 2 touches here. And this is how I used to draw trend lines back in the day. Before I found a new system that works better than this because it has a high risk reward, not necessarily the win rate difference, but sort of high risk reward, which does carry your account a lot. But nonetheless, you draw it like this because guess what? We mitigated demand. You can even combine this with my advanced 100 source strategy if you want to. If you find this more helpful or easier, you draw like this, and basically you're entering with a buy stop as soon as it breaks, and your stop loss again. You cover whatever structure you want here, and you just target a weak high. There's a 1.7 risk reward. This is why I say it's a lower risk reward system, because with my new system that I figured out from the markets and experience, it's a much better risk reward. It's almost usually double as you can see. But nonetheless, this is still a great way to enter the market because you won't ever miss trades. Since you're not waiting for a retracement, you're just immediately entering as soon as the trend line breaks. Now, what happens if there's a new slope? So we have slope 1 here. If you know what slopes are, you guys should know what slopes are if you've passed high school. But here's our slope 1. And there's another different slope here, right? It's a different steepness because originally this steepness doesn't cover this third high. It only covers these first 2. What do you do in this case? Well, in this case, usually you can draw a new trend line. So you would then adjust this trend line here to then touch the second one, the third one here, and you skip over the second one. Now, if it's a huge difference, then I draw a new trend line. But if it's close enough like this, I'll draw it like this. And then your entry would be lower here. It would be here, and you can get a better risk reward. It would be a slightly earlier entry. But you can see how it works here, right? Now, let's give you guys another example of trend line break. You have this trend line here. And you see the slope does change. So in this case, you can either just keep like this, or you draw a new trend line starting here. Or in this case, here's a funky situation that happens at times. This is what I call in my 100 course the impulse delivery, where I use my impulse model, which you can catch a much better risk reward at an earlier entry. But with trend lines, it's very difficult. And the reason why is because you don't really have highs to really go off of here in this case. It's very steep. So when I say impulse, I just mean something for you guys that are beginners, just a very steep delivery in price where there's minimal pullbacks. When I define a pullback as candles going in the opposite direction of where price is heading. So a pullback in a bearish trend will be bullish candles, vice versa for a bullish trend. In situations like this, trend lines are very difficult, right? And so I would wait for new structures. So you will see this new structure here. This is the previous high. I wait for this. You could draw something like this. It's not going to be very clean. It's not going to look that good. It's going to be looking like something like this. So either you just draw a very steep trend line, or you just wait for a new structure. So if you have new structure, let's say forming maybe like this, you could then draw a trend line like this, if that makes sense. Now in this case, you can't really draw a trend line break like this. It doesn't make any sense, right? So situations like this are more gimmicky. This is when I would just recommend you use my normal entry model or impulse delivery model to enter this trade. But usually trend line works very good when you have very clear structure like this. Let me give you guys another example of trend line break, reversal version. Let's say you have this structure here, right? So this is the low that made this high. So this is your range here. Now you can see how this steepness changes. The slope changes here to this. And then also changes to roughly something like this. What you want to do is you want to try to keep it realistic. So like if I see price all the way up here, I'm not going to take a reversal entry down here. It's way too far from where price is currently. My stop loss would be this. Whereas, because I'm also asking myself relatively, where is my TP going to be placed? Well, my TP is literally going to be placed here, or placed at this mitigation here. Let me draw it for you guys. This demand right here is going to be my TP, potential TP. This is where potentially price can reverse from. So this doesn't make any sense to draw a trend line near where you're going to TP. Always keep things relative in proportion to where price is currently at. So this trend line doesn't make sense. You want to draw trend lines that make sense, but also make sure they have touches. Now, does this trend line here make sense here? Not quite, right? You got to wait for a price to hit some sort of POI first. That's another thing you can put in line with this strategy. You don't just take any trend line break in the middle of nowhere. Because if a trend line breaks in the middle of nowhere, guess what? That's your the other method where you just buy it up, right? Buy it up to go higher. Boom. There's your other variation that was showing you. Remember, I showed you guys previously 2 examples. One on the left, one on the right. That's your variation 2. So you want to make sure you have context put in where you have a zone that you're looking for. There is a supply zone here perfectly. And if you don't know how to mark these, I recommend you check out some of my free content and trade recaps. So go over stuff like this. Or check out the free Discord server. I do post exclusive trade recaps and explanations in there as well. So this doesn't make sense. You wait until price hits the PY. Once it hits your demand or supply, then you draw your trend line. So my trend line here, obviously we tried these two, it doesn't make sense. I'll draw from here and I see what works best. This doesn't make sense here because this already broke here and we didn't hit the supply yet. So no, we're not taking that. Now this makes more sense here. Look at this. We got 3 touches here. We have a low, we have internal low, we have another internal low. Remember, ideally it should be bearish candles because we're in a bullish trend. That's how I kind of defined my internal lows, because the internal low also should ideally make an internal high. There's my break. So I'm not waiting for the body closure. Now, what you can do to improve your win rate slightly is wait for an engulfing candle body closure. So something like this, or something even stronger like this, way past the trend line, because sometimes you will get a wick at the trend line break and then continue higher. That's just liquidity. But in this case, as you see, it worked out fine either way. There's your break, sell stop, stop loss, TP at the opposing range, either flip, origin, inducement. There's a 2.24 risk reward, just trading off literally a trend line break. Now, there's gonna be situations where it's near impossible to trade trend line breaks like this. Like, what are you gonna do here, right? You can draw this technically. This could work, but I'm gonna be asking myself, where's my TP, right? My TP is gonna be basically at the next high here, which in this case, it doesn't really make sense for me to trade a trend line break. This is also basically at open, hence why the massive volatility. And it's not like I'm gonna be able to really draw a trend line here that well. You can, but it's not as good. If you want to draw something when we have a small range on 1 minute, a good trend line, you need to go on the 5-second, 15-second time frame, because you have a lot more structure to play with to draw that trend line break. So remember, small ranges, if it can't be drawn perfectly or well, go to the seconds time frame or a lower time frame, depending on what time frame you're currently on. But I trade on the 1 minute for the most part. Here's another example of where we have a small range, but also it's an impulse delivery. And like I said, situations like this, you really can't draw a trend line. It's very hard. You can't really draw a trend line this steep. This is why I use the impulse delivery model. Or like I said, I'll give you guys an example right now. Go on the seconds. See if there's anything on the seconds that you can draw a structure. In this case, this is what I see here on the seconds. There's my break. My entry's right there. Stop loss, you can put it wherever you want. And this is what it will look like on the 1 minute. So you can see how this line here doesn't really make sense on 1 minute, right? You won't be able to draw this line on the 1 minute candles. You have to go in the seconds, guys. There's your 4.4 risk reward. Let's say you keep a conservative stop loss. It's about a 4 risk reward. As you can see right there, slightly earlier than my entry here, but that's okay. So you can see that's how basically the different variations and styles of trendline breaks you can draw. Now that you guys know how to trade the reversal model of trendline breaks, let's go over some examples on a chart of trading with a trend, trading fake outs, fake reversals. So here's an example. Instead of trading a trendline break, here is an example, just to give you guys a random example. Again, you're buying this instead of selling here. So you're buying this and you're targeting the high, or targeting whatever you want, opposing liquidity or PY. So here's example one. Another example would be something like this. This is the second variation. Remember I showed you guys two variations? The same number one, the first variation of a continuation of a trendline fake out. You can call it whatever you want. I don't really have a name for it. You can just call it like a trendline break fake out. That's probably the best name, or trendline fake out, right? That's probably a better name, trendline fake out right here. But instead of selling here at the break, you buy, because you know the trend is clearly bullish. I actually have a trade recap posted right before this video. I should be discussing the reason why I was bullish here anyway. So you can watch that, and it'll probably help add more context to better understanding why you would buy here and why I buy here instead of selling off that break. So here is variation number two of a trend line fake out. You draw a trend line essentially on the pullback. You might have seen this before because it looks like, I think what people call this like a wedge, I believe, or triangle pattern. I don't remember exactly what people call it, but I think it's like called a wedge or something, where price breaks out. Anyway, point is, let's go back here. Again, on the 1 minute here, it does not look great. Why? Because it's a very tiny range. So let's go in the 5 seconds now. Aha, look at the 5 seconds. Do you see how much clearer this looks? Now I'm not going to take this high because look, this doesn't make sense. You can I guess here, but then go in the 1 minute and see where your entry is. It's not a horrible entry, but my TP would be this high as a potential TP where price can reverse, and it's very close to your entry. You don't really want that. So go in the 5 seconds, find something that makes more sense. We have new structure here, so let's use this high here. and find highs to use. So we have a high here. Again, you could have probably got a faked out here, potentially here, but then you just redraw a line here. Once you take that loss, again, it's up to you how many tries you want to give each PY or zone. For me, usually I give myself 2 tries because there's fake outs that happen at times. In this case, there's a 5-second demand that was unmitigated here, hence why price went lower. But it's not always bound to happen. Sometimes it's going to go off just a flip here. You enter here, stop loss, that's up to you, and boom, your TP. Again, not as good risk reward as my normal setup, but it still works here. And as you can see, this line looks so much cleaner when you go in the seconds than on the 1 minute. So those are just examples of basically every single version of the trendline break. I'll give you guys one more example before I end this video. Don't want to make it too long. I'm trying my best to make my videos as concise as possible now also. So let's see if you can find another example here. Like for example, something like this, I would almost never use. I'm not ever gonna do a trendline break here. This is just silly. Like entering up here off this trendline break, no. Right? These are just liquidity points. These are highs. They're not like an actual trend. You want to see a trend is something where you see internal structure building going in one direction. These highs internally are just too close to each other. You need something like this, right? Something like this. Boom. Matter of fact, there's your entry, stop loss, and TP. You can even have a static target if you want. Just want to go for 1-to-1 or 1-2, right? Boom. There's an example there. You guys, another example of trendline break here. It's going to look something roughly like this. All right. Because remember, you draw it like this, and then you later adjust on your way there, depending on, again, how you want to draw this, to be honest. And then you can see something like this roughly. This is why I'm not a huge fan of trendline breaks anymore, because there's some discretion involved in which points and when to change your trendline slope, because market structure changes in terms of its slope. You're not always going to keep the same slope. If the market structure slope was the same every time, the market would be so easy to trade. Like, it would be way too easy to trade. That's just not how the market works. For every winner, there's a loser. This would be your trade. This would be your short. 2 risk reward right there. And trade management, that's not really related to today's video. Not going to go over that, but there's different ways to manage your trade that I do go over within the private ETU team as well. So I hope you guys do enjoy today's little video talking about how to trade trendline breaks better than Tori trades, because it has higher frequency, and given the right context, you can have a higher win rate as well. So you can make more returns every single month. If you guys want to learn more from me, click the link down below to apply for a one-on-one mentorship or a course, and I'll see you guys in the free Discord server. Peace.